Alright, welcome back everybody to the Simple Markets channel. My name is JB, and judging by the title, you guys can see I'm going to be going over 4 of my main tips today to ensure that you see better success in your trading heading into 2026. For those of you that did not achieve your goals in the trading space in 2025, do not let 2026 end up the same way. If you do not make a change, then the results will not change. For those of you that don't know, I do schedule my videos ahead of time, so if you are seeing this, it is probably that weird week between Christmas and New Year's. And just a reminder for most of you out there, we do have a New Year's special going on. We are going to be doing a huge discount heading into 2026 for people to join the community and start off on the right foot. It is usually one of our biggest discounts of the year aside from Black Friday, and we've even had traders who joined in January of 2025 and got funded by the end of their first month in the group. So definitely check it out and take advantage. That code is PROFIT2026. But without any more time wasted here, we're going to dive into tip number 1, which is going to be simplicity for consistency. Now, you guys know we are literally named Simple Markets for this reason. You hear me preach it in every single video. But with all the content out there in the trading space right now and the confusion that a lot of new traders coming into the YouTube space find, it is more important than ever to keep your trading plan and your strategy as simple as possible, and I promise you it'll lead to more consistency in the longer term. A trader who understands the idea of probabilities will be successful in the longer term far more than a trader who gets too intricate into the technical analysis side of things. And for a better example of this, I'm actually going to hop over to the charts here and show you a pound AUD trade that I took on the 4-hour time frame. Most of you are familiar with the strategy that we trade here at Simple Markets. It is even free in the description below to download. But one thing I do want to make very clear about it is designed a very specific way to be as simple as can be. Of course, there's always some discretion involved in any type of trading plan, but the most important part overall is limiting the variables within your strategy. Now, for myself, I simply see the break of structure, the fair value gap, the sweep of liquidity involved. I mark out my range and even use a fib for entry. It keeps it simple, it keeps it consistent, it's even on one time frame. I don't have to do multi-time frame analysis. Now let's compare this to something that some of you watching may have a very similar strategy for. What most of you may do is, instead of taking the trade here at the zone that I talked about and just simply entering for a 3RR gain, you may look at this range and have this, for example, as a point of interest. Now for some of you that could be a demand zone, for some of you that could be an order block, it could be a fair value gap. Whatever it is, it's typically a 4-hour or a higher time frame point of interest. And when price finally reaches into that zone, you will drop down to a lower time frame like the 15-minute. Now price reached the zone here, and of course we wait for that next break of structure, and many of you might go and take your Fibonacci or even just enter off a supply demand or fair value gap at this point. And essentially what you're doing here is mitigating your overall stop loss, keeping it nice and small in the chance for that higher risk to reward as we're seeing here. It would have played out great, and honestly, congratulations to you because that is a great 8.5R trade. Now, some may be a little bit more discretionary. You may enter off something like a fair value gap here, which we can see is mitigated fairly well. You may enter off something like a demand zone here, which as you can see may have even missed if you tried to enter off that area. And look, now I'm not saying these concepts don't work, but what I am trying to get across is that there's many increased variables here when you go and do this. Some people don't even like entering on the 15-minute time frame. They might actually go a step further here and drop down into the 1-minute time frame. And when you do this, you may see that fair value gap is filled, and then once again we can look for that break of structure within your zone. Let's just take a Fibonacci, for example, here and draw it on again. And as you can see in this scenario, we actually end up missing the position and then letting it run without us. There's some people watching this here and saying, you know, JB, I would have entered at this zone here and I would have taken my 100RR. That's perfectly viable, and I'm sure if it worked for your strategy, congratulations. But the thing we need to keep in mind here is all of the variables that we are adding together as we continue going down and down in time frame. All of these increased variables actually lower your repetitions for your trades. Many of you using this type of trading style may get those 8 to 10R or even more RR per trade, but you also understand that these trades are very seldom and they may come around once or twice a month, meaning if you don't trade on that one day or even miss the position, it's very easy to trick yourself and go in hindsight and tell yourself that, oh, I missed it because of XYZ, I will get the next one. But you got to understand what that does for your edge in your equity curve when you're relying on these 1 to 2 great trades to make up for the entire month or week's worth of losses. This is just not the reality of consistent trading, and the way to keep it consistent is simplifying that plan drastically, using something even like a singular 4-hour time frame like you guys know we trade here. Now once again, this is our first tip of the video because it is honestly one of the most common things that I see traders getting stuck in for years. is taking a strategy with all of those increased variables, very low time frame, and they end up stuck with it for many years because they're trying to make it work and telling themselves that it's their own psychology and lack of discipline leading to that inconsistency, when the reality is a more difficult trading plan with more variables is just going to be naturally more difficult to be consistent in the longer term. So if you have been using the same strategy for all of 2025 or even the last 6 months and you are not seeing success with it yet, keep this tip number 1 in mind when heading into 2026. And like I said, if you don't change anything, the results will not change. So do not let 2026 go to waste. Now, tip number 2 that we're going to go over here is actually talking about win rate and how it does not equal your success in trading. I know a lot of these gurus and people online tell you that you need an 80% or a 90% win rate to be profitable as a trader, when in fact the metrics actually prove differently. Many hedge funds even have a win rate of less than 30%, but it's their proper risk management that actually allows them to make those long-term consistent gains. Now, as you can see here, this is my live trading journal, and I have a win rate of about 37.8 so far in 2025, and we're heading into the end of it at this point. Overall, my last trade of the year was 21st of November. We're heading into Thanksgiving week, so I will be slowing down my trading, and I typically end off midway through December. I don't tend to trade through the holidays. So while you guys are watching this video, I am very likely closed out for my trading year, but we're at a gain of about 100% this year, which is essentially doubling the account, only utilizing such a what would be considered low win rate to most of the YouTube and social media space. The most important factor here is that consistent execution and that 3RR ratio per trade. A lower win rate with a consistent and sustainable RR is going to be better than a higher win rate with, like we talked about in step 1, those very long shot 8 to 10, even more RR per trade. If I miss a single day, if I take a vacation or whatever it may be, life gets in the way, I miss that 8RR trade that's supposed to make up for all my trades, it is going to be less consistent and less sustainable in the long term compared to something like this where I can take a trip, I've taken a few this year, and I can still make those consistent gains because it is more about that lower RR and consistency than it is those home run trades. Now, another factor, you guys know this is the document that is downloadable below. If we go here, we have some data on FX Replay as an example. Now, this shows a win rate of 32%, but you can see the consistency of the equity curve over that long term. This is about 5 years worth of data. And if we go down below, this shows the monthly breakdown of returns per month using 1% risk from 2016 all the way to 2020. And we can see the returns are absolutely ridiculous despite that 32% win rate, which would be considered fairly low for our community as a whole. Many years even doubling the account and more, and 2020 is of course not complete, but still a 37% gain that year, for an overall estimated gain of about 500% over the course of those 5 years, meaning reaching about that 100% gain per year. And all this trader simply did was increase their repetitions, not focus on win rate. And as we know, mathematically speaking, a higher win rate with less trades is actually less efficient than more trade positions with a lower win rate over the long term. Increasing those repetitions is more important because it gives that win rate the time to play out a lot quicker. If you have an 80% win rate and taking only 25 trades on any given pair per year, you will be significantly less profitable in the long run than the trader focusing on 300 trades per year, even with something like a 30% win rate. This is a super important concept for people to understand because you need to ditch those holy grail strategies that are claiming to offer an 80 to 90% win rate. It is going to keep you once again stuck in that same spot that you may have been in 2025, so keep an open mind going into the new year. Now, tip number 3, and probably one of the more important ones as well, is going to be backtesting and data collection. Now look, if you went the entire year of 2025 without seeing that tangible trading progress or even income in your pocket or even getting funded, it is very likely you may not be a trader who has enough data or has backtested enough for their trading strategy to prove that it is actually profitable. If you simply went on YouTube and you took a trading strategy, even like the Simple Markets one, downloaded it, didn't backtest it, and then look for those returns that are going to get you funded right away, I'm sorry, but it is not how trading is meant to be approached, and it will not work. Many of you out there watching this video might even be holding on to a strategy that you heard some influencer or some guru pushing, claiming that it is a 90% win rate, and they have so many results and testimonials, I'm sure. But at the end of the day, if you do not backtest and practice it for yourself, you will not see the progress you are looking for. And this is where the hard work begins and what many people don't want to hear. The Simple Markets community, the people that join us, we really push the idea of backtesting and practicing themselves and then submitting it to a coach for a review. And as you can see here, this is our FX Replay account with almost 80,000 trades worth of data on our exact 3RR strategy. There is no question how to trade it, what trades are valid versus not, what the metrics or data should look like in the long term. There is no questions left unanswered when you backtest this amount of data, and it is concrete proof that the strategy works not even to YouTube but to yourself when you trade it and see the data in front of your own eyes that you collected. It is one of the easiest ways to separate yourselves from the unprofitable traders versus the people who are making consistent payouts each month with their strategy, is simply sitting down and backtesting, call it 30 minutes a day, or even doing a more intensive session of an hour and a half per week. Anything will be better than nothing in this scenario, and I highly recommend making this change, and I promise you will see the results. Once again, our strategy is for completely free, downloadable below. You can download it and backtest it yourself. Make it be the first strategy that you backtest because of the simplicity of it. You will have a rough 50 to 100 first trades when you're taking on a new strategy, but on trade 100 to 200 and anything beyond that, you will start seeing that consistent growth. You'll see yourself getting better with the strategy, and it is significantly more efficient than taking a strategy and trying to trade it in the live market, where it could take you years to get 300 trades worth of data. Someone who is backtesting gets that 300 trades in maybe less than a few weeks of backtesting at a very slow and consistent pace, and they will know more about their strategy by week 2 than you do in the whole year of 2026 coming up if you do not backtest. So please implement this change. We even have an affiliate program going on with FX Replay. You can get 15% off of your monthly subscription if you use our code in the description below. And last but not least, guys, the final tip is going to be networking or focusing on a community. Now, this tip is extremely important as well as underrated. Everybody, when they get into the trading space, has that kind of lone wolf mentality where you want to figure everything out yourself. You don't like paying for courses or whatever it may be, but keep in mind, being surrounded by people who are in the space or even in the position that you want to be in is going to give you 10 times leverage on whatever capital you can spend. Now look, this isn't me saying to go drop 10 grand on a course from some guru. It is more about the community or the networking aspect of things. I'm sure there's plenty free groups out there who you can find people trading. Keep in mind, I'm sure the quality of those people are fairly lower compared to people willing to invest in their education. But something like Simple Markets, where we are almost at 60 funded members, we have people like this taking payouts every single month. They explain how they approach their prop firm challenges. They talk about different prop firms and their pros and cons. They're out there testing and sharing data and making changes to the strategy accordingly. If you are surrounded by an entire group trading the exact same strategy, a majority of that group being funded, sharing their payouts, their ideas, and different knowledge within the strategy that you use, I promise it will level up your trading game, just being surrounded and having that education available. You guys know you have me at your disposal as well. You can always reach out and DM me, and I help everybody who messages me. Doesn't even have to be trading related. You can talk about investing. You could talk about real estate. You could talk about even fitness, and I will help you out. But just really importantly, guys, I want you to understand having people surrounding you, testing different prop firms, understanding ways that work and do not work for approaching prop firm challenges. Even myself, I have learned so much from my community and the people within it who are raking in payouts every single month. There's unlimited knowledge to go around. It is so important to surround yourself with people. Everybody knows the age-old saying, you are the product of the 5 people you spend the most time with. Why surround yourself with your one trading partner or even try to take the lone wolf mentality into trading when you could be surrounded by 59 different funded members in an entire community working on the exact same strategy and optimizing it together with over 80,000 backtested trades? Guys, I cannot recommend this step enough, and I really think if 2025 went to waste for you and you did not see progress, taking that different approach in 2026 can be huge for you. And once again, there is no better time than right now. We even mentioned that huge discount we are doing for the community heading into the new year, because we firmly believe people that make that change are most motivated at the new year, and it is when you will see the best results, is when that motivation for yourself is high. Don't let 2026 go to waste, guys, the same way that 2025 might have for most of you. Take that initiative, make some changes that we talked about today, and I promise for those of you that implement all 4 of these, you will see more success in 2026 than you did in the previous year. Thank you all for watching. I hope you appreciated the content. Happy New Year, everybody, and I will see you guys in next week's video.